All right. Good morning, everybody. Today is Wednesday, October 23rd, 2019, and time for another edition of our Wednesday Investing Systems Trading Service live show. And we'll jump right into it here. Just getting everything set up. Here's where we are with the S&P 500. This is basically what I have is sort of the current market structure here, right? This line, this vertical line on October 30th, 1 week from today, the day before Halloween, is the next Fed announcement. And I think that's going to be a pretty big deal. Honestly, I haven't been keeping track of what the market's pricing in, and based on the last Fed minutes that came out, I think that the Fed minutes might have come out from the prior meeting um, on a Wednesday just within the past couple of weeks, but basically they're torn on whether they should, they've cut interest rates twice now, right? I have them both circled here. The last two Fed announcements, two rate cuts, right? And so, you know, they've all come out and said various things, but one of the things that a few of them have said is that they're not embarking on a rate cut cycle. Right, that's sort of the big thing. This was the mid-cycle adjustment, and then this was, I forget what it was characterized as, but the Fed's new mandate is to keep the longest expansion in history going for as long as possible. The thing to note that we always talk about on here is that last two Fed meetings, you got a subsequent pullback. Last Fed meeting, subsequent pullback. Prior to that, Fed Fed announcement, Fed meeting here, significant pullback. Um, back last October. No, this was a September meeting. So last September meeting, they hiked rates here, right? You can see what happens. So anyhow, and of course, hey, they've started a new round of asset purchases that we're not calling QE4, and there's a lot of weird stuff going on in the repo market. So I believe next week everybody's going to be focused on obviously what the Fed's going to do. So this current rally that is underway, amazingly enough, the S&P is about 150 points higher than this low here, roughly. This low was on October 3rd, right there, and market took a pretty good winger there for a couple of days, and then we had one of those wild sort of reversal days there, and this latest sort of move higher is a lot of it's due to the administration hyping up their trade deal with China, which they've called Phase One, and then of course, when was it this Friday here? I think is when they called it a deal, right? They called it a deal, Phase One deal, and then come to find out that not a whole lot of progress was really made, and there's nothing actually written down and signed or anything. And so, they've spent a lot of time sort of pumping up the market based on impending trade deal with China, and I think people are sort of growing weary of it. It's been going on for well over a year. I mean, it's going to be pushing a year and a half here pretty soon. So, anyhow, bigger picture on the weekly chart of the S&P here. You got this overhead resistance line. If the market, I mean, the S&P is only like 1% from the all-time high, which is back here in July. Um, and so hey, it won't take much of a rally. Certainly, a one-day rally could literally put this thing at a new all-time high in the history of the world. But as you know, I've been watching this trend line, and that's pretty significant overhead resistance. Doesn't mean it can't get broken, but That's the thing to keep your eye on, on any rally. And so I wouldn't expect that the market's going to break over this prior to the Fed meeting next week. You never know, but that's a long way up actually. Let's take a look here. I shouldn't say a long way up, but yeah, you're looking at about 30.56 roughly. Yeah, that looks about right. Um, well, that's where it actually intersects with Fed Day, 30.56. So, prior to that, and this is what's kind of interesting at this juncture right here, is this downward sloping trend line. We came really close to it yesterday. I mean, really close. And so, as you recall, about the past week or so, even couple of weeks, but more so the past couple days. At yesterday's open, you sort of got that feeling, or I sort of got that feeling that, hey, nothing can stop this market, because that's just how it's been acting. It's no matter what kind of news comes out or what gets thrown at it, the market just seems to be extremely resilient, right? And even today. And so there's a lot of weird stuff going on under the surface, right? But the market itself's holding up just amazingly well. You got individual stocks getting crushed. Um, these Dow stocks, getting hammered, and I think, reporting lackluster earnings and warning and that type of thing, and the stuff going on with Boeing. But I mean, the market itself just seems to be amazingly resilient. But it's just so interesting that yesterday started off like on a real positive note, and then sold off on, quote unquote Brexit, right? This whole Brexit thing kind of turned everything around, but that's a good excuse if you ask me. Anyway, so there's your first major sort of overhead resistance point. And quite frankly, I mean, the market needs to get through this, right? It needs to get through that. Otherwise, you'll have like a lower high, a series of lower highs. If for some reason the market were to start selling off here and not take out yesterday's high and not break this trend line, then you got a series of lower highs, right? So you look at the chart and say, well, you had you rallied up to here and then sold off, and then rallied back up and made a lower high, and then sold off, and then rallied back up and made a third lower high. So I'm not really sure how far down. See that gap right there? That gap's probably a decent place to. If for some reason the market sold down into that gap, then in that area right there, like anything below, call it 29.62, you could say, well, we kind of made a third lower high. So, big scheme of things, nobody can really see any I mean, there's a I shouldn't say nobody can see any reason, but there's so many reasons why the market should be selling off and it's not, which it just really really seems to be unusual to me. But nevertheless, interestingly enough, after this big sell off here, like when we were down here a few weeks ago, you guys remember we were down to like one open trade, right? Like one or two, and then as the market rebounded and started a new upcycle, then tons of the pending trades triggered in, right? And so we basically the system took advantage of this upcycle. This last down cycle here, was pretty rough because it lasted a few weeks, but system started triggering in a bunch of trades on this upcycle, so there we are. So real quick, I want to on any further strength, keep your eye on that. The market could drift higher, drift higher. So Fed Day is going to be pretty important, if you ask me. I think that's going to be the spot where the market either decides that it's gonna break into one of these. It's either going to break into this quadrant, or I mean, depending on where it lands here on Fed Day, right? I mean, it could actually be above this trend line by next Wednesday. We got a whole nother week of trading to go. So, but look, after this rebound here, just like these prior run ups into Fed Day, it won't surprise me and all the prior times too. I mean, there's like 5 spots on this chart where literally within a couple of days after the Fed announcement, the market, you know, had a pullback. So, be interesting to see what happens this time around. Some other real quick stuff before I get into looking at the open trades. IWM here, man, IWM. Generally, this time of the year, you start around, well, any time now, let's say, but generally speaking, around, Halloween to Christmas, Halloween till New Year's is generally a strong time of the year for the small caps and the Russell 2000. But you can see that it peaked way back here in August of 18, if you think about that. And it's about, 12% roughly. I haven't calculated. I know it was like 15% like back over here. The Russell small caps were like 15% off of the high, so it's probably about 12, 11% here. I don't know, but anyway, it's kind of in no man's land. I mean, this thing has gone nowhere for. This is a 2-year chart, and so you can go all the way back to December, November. Well, this is November, December of 2017, right? And Russell's like sort of stuck in the same spot at this point. And so, it's been up, it's been down, it's been all around, but fact of the matter is that, there's not a lot of love for the small caps right now. And then you got, the IPOs. Oh, geez. IPOs have been a disaster. There's Peloton. Look at Beyond, right? Beyond had that crazy run up to $240 a share, and now it's languishing here, right? Let's see, Chewy had a big, Chewy had a pretty big sell off, and it IPO'd and then it sort of bounced around in this big channel here and then broke down. So it actually looks like it wants to try and rally back up, but and I'm probably there's dozens of these IPOs that have kind of bombed really, and so Texas Instruments I wanted to look at because Texas Instruments, big run up here, and then they came out with earnings news that I think is affecting all the semiconductors. Interesting on that huge gap up or huge gap down that they bought it up. Pretty typical, right? Big brand name stock gets slammed on earnings and they gap it down huge and then it rallies. So let's look at the semiconductors real quick. Yeah, SMH semiconductors. I mean these things up significantly since the beginning of the year. One of the better performing sectors, and just barely taken a little hit on that. So no huge big deal. The speaking of IPOs, this is the software stocks, which have been the super high growth type of stocks. The ones that well, really the darlings, sort of the leading sector of the whole market has been like these SaaS, software as a service stocks. And here's one that IPO'd recently, Slack, right? You can see this sucker's been cut in half. Nasty. And I mean, I got a whole list of them, NOW. I mean, these things are just brutal, brutal sell-offs in these. Twilio, remember that? I mean, there's so many of them, but yeah, I mean, it's just been brutal sell-offs in a lot of these SaaS stocks. I'm sure there's an ETF. There's a cloud ETF. There you go, cloud computing ETF. What a great time to IPO it, right? I mean, look at that. So there's another one too, but I can't think of it. So anyway, a lot of weird stuff going on. The home builders have been super strong. Home construction, home builders have been one of the darling sectors this year. So a lot of strange stuff going on. Anyway, real quick, look at the Dow. Whoops, DJIA. I don't even know what I typed in there. Yeah, the Dow is kind of, it's got a little bit different of a pattern than the S&P. Same sort of thing, the big run up, sell off, kind of a lower high, and then interestingly enough, this latest rally, like on the S&P, brought it almost back to the prior highs, but on the Dow, we're still quite a bit below that. So, hard to tell what the Dow is going to do from here. You do have a series of higher lows, which is positive. This 26.5 is kind of the support resistance line in the sand here, and then of course there's the all-time highs. So no telling what's going to happen from here, but the S&P 500, it's either this current rally is going to just continue and and gain some steam, break over here, or you're going to chop around and then perhaps roll back over. And so I guess it just depends. It just depends. Um, anyway, so let's jump into. I wanted to today. I just wanted to like take a look at the open trades here. There's not a whole lot pending. Last week we looked at the pending trades and some of the ones that. Look at that. There's only 5 pending trades, right? And so over the past couple of weeks, we did a lot of looking around at the actual pending trades, and so now a bunch of them have actually triggered in. And so what I figured I'd do today is just go down the list here, starting with the most recent one, and we'll take a look at these. Let me get this up on my other screen here so I can look at them and just see what's what here. We talked about this fly. This is the one that's triggered on 10/21. Right? We talked about this one last week. I believe I drew a trend line there. Right? Something similar last week, and we talked about it. So here it is. Um, Trigger price 1975, gapped over that, closed over it this day, and so here's the open. Right? I did want to mention that under this scenario, right? This is a pretty decent looking setup. Under this scenario, there's a couple different things you can do when obviously you couldn't have bought it at the trigger price, nor would you have wanted to really, because we were looking for a close over the trigger price. So this day it opened at 2018, which in the big scheme of things, I'm gonna note that on here just for open 2018. I actually have a better example of all this, but since I'm starting with the most recent example, all right. So check it out. The target on this is 21, right? And of course that's based on the ATR, monthly ATR of the stock, and in relation to the trigger price and all that good stuff. So not really. Doesn't really seem like that far away. Seems like 21 is fairly attainable. So let me just put that on here. Target 21. So there's a couple ways to do this. One is you can jump in a half position right there at the open the following day. You can buy the whole position, but a good way to do it that we found that Jeffrey talks about is that you split your position up. You just go ahead and pull the trigger on half of it at the open price the day after it triggers, and then put a limit order in for the other half at the trigger price, right? And so maybe you get filled, maybe you don't. So that's one way. That's one decent way to play it, I think. But um, so basically on something like this, you would just if you got in at 2018, so let's see, 2018 minus the actual trigger price of 1975, is 43 cents, right? So to compensate for that, you'd simply have your, if you got in, 43 cents, is that right? Yeah, 43 cents higher, this would be your actual target. I should make that a different color just for example purposes. And so we'll call that the adjusted target, which would be 21.43. So I mean, it's pretty much simple as that, right? Now there's this is kind of a weird one because it actually didn't even trade at the trigger price. It just gapped over it, pulled back to almost the trigger price, and then rallied. Um, and so it's just kind of a weird one, but that's the way that's a couple ways you can compensate for the entry and actually the target. So I have another one. I'm just going to go down the list here. I have another one that's even a better example, and when we get to it, I'll talk about it here. So yeah, let's take a look at this one. Business equipment, MLHR. Look, you can see we had a trade in this back over here in September, and then here we are again, right? Interestingly enough, the this is like on a weird earnings schedule. So if the earnings came out on 9/19, that means that earnings on this are not imminent. So this one was kind of nice because the trigger price here, you can see how the day that it actually triggered, it closed at 45.67, which was a little bit above the trigger price. But look at this. The next morning opened right there, just right, little tiny bit above the trigger price. So good example. You can see on this that how the stop has trailed up to like literally break even here. And so, so far so good. Um, Kind of a weird looking chart, but there was a little bit of a pullback here. Pullback, trend line break right there, and then boom, here we are. This kind of weird earnings candle or bar throws everything off. Like if this wasn't on the chart, it would look a lot more well behaved, sort of like this little sort of dip and then rally like it would make more sense. But moving on, let's see, WLH. I think we talked about this one. Yeah, this is a case where the day that it triggered, it closed way above the trigger, and so I mean there was just the only thing you could have done with this was to say, hey, I'm gonna go ahead and just jump right on in. So, it's another case where theoretically, if you especially on something like this, I can't necessarily recommend. You're talking the next morning's open was 2107, and so that was a pretty significant gap over the trigger. So it is what it is, and this last cycle we did see quite a few of these, which I thought was unusual, but not much you can do with that except if a stock happens to do that, then you basically just pass on it and move on to the next one. So this was the example I used last week of a stock that it gapped over the trigger a little bit, right? And then closed, down here, but the next day it opened trigger 25.75. Next day it opened at, a buck higher, right? But it did manage to it just took off. And so the whole idea about getting in maybe a half position, at the setting a limit order at the actual trigger price for the other half could have worked or whatever. You can see on this one, it took off, and just as we speak here, it's hitting the parabolic stop, coming back down. So, still, pretty decent little rally there. If you just bit the bullet and jumped in, a buck higher this morning here, still got some pretty good follow through on that. So if you do decide to jump in above the trigger price significantly, then you still want to use the system computed stops, because the stops are, the target you could adjust, right? Like on this BMCH here, where is it? The target was 27, right? So I mean, this is a perfect case, I suppose you could say. So that was the target, and that was based on, obviously, this it triggering in at this price, 25.75. And so remember, the trigger's not supposed to be like, an exact price that you got in at. Although, it's kind of nice sometimes to be able to get filled right at the trigger price, and then that way all the calculations and percentages and all that type of thing in the system match up to exactly trigger, or I'm sorry, trigger's target. So on something like this, this is one of the cases where just jumping in the day after it triggered, like the next morning, and there was a pretty big gap up right there. You'd have still done okay with that, right? And so, so the idea here would be just what I said before. So say you got jumped in at 26.75, instead of your target being 27, it would have been a buck higher, right? It would have been up here at 28, basically where this parabolic stop is, and so this would have actually worked, right? As weird as it is. So continue down the list here. This one's moving along pretty well. GMS current stop. You can see and it's kind of it's another chart that's just kind of weird, but this whole area right here is kind of weird, and then it just kind of drifted sideways. But there you go. I mean, stock up at new highs here. So AutoNation, this is a volatile one. This is a very, very volatile stock, and seems to be, let's see, do I have the trailing stop 49? Yeah, I was looking at this last night, and I didn't actually, this is pretty interesting. I didn't actually mark the stop on here, but I'm going to put it on here right now. So that the trailing stop, the T stop, last night on the update, system moved it up to 49, which seems to make a lot of sense, right? Just a little bit under, this crazy, I don't know what that was about yesterday. Like, I have no idea. So you can see it ran up here, and it hit the system calculated target based on the trigger price, although getting in a little bit higher here, because this was the trigger day back here, and so that target would be a little bit higher. But look what it did today, right? I mean, it's kind of right back. So that's kind of interesting, because this could have very easily this morning tagged that stop, but it didn't. Gapped up a little bit. It's had a pretty big day. So yeah, this has got a lot of potential here, to be honest with you. Comcast is, and I hadn't mentioned this yet. Let me try that again. CMCSA. Sometimes my charts get flaky. I don't know why. I don't know why it decided to flake out now. Hang on, let me go to the next one. All right, now let me go back. Huh. Well, anyway, what I was about to make a point here. I might just have to pass that one up. But on Comcast, we're right in earnings season now, right? And so Comcast is getting closed today using today's open price, because that's how we do it. We don't hold stocks through earnings. We close them using the opening price of the day that, like, I believe they're coming out with earnings tomorrow before the bell. And so that's the way we do it on those. If any stock that's coming out like after, at the close today, we would close it using today's open. Any stock that's coming out tomorrow morning pre-market, we still use today's open. And so the reason we do that is that the opening price of the day prior to the earnings release is a really good place to use, is sort of like the place that you could just anybody could just basically sell at the open or within a couple of minutes after the open, just pull the trigger and sell it, so that you're not holding over earnings. And you guys that have been around a while through a few of these earnings seasons know that we brought tons and tons of examples of why you don't want to hold a stock over earnings. And especially this earnings season, it seems like there's a lot of there's a lot of stocks that are getting hit, and you just don't want to be sitting on a stock that gaps down, 15, 20, 25% on the earnings release. So I have a feeling there's going to be a lot of that. All right, let me try one more time. Nope, it just does not want to pull this stock up for whatever reason. There could be a reason I'm not aware of. Oh, okay, so moving on here. After Comcast, which is going to, I wanted to see what what Comcast looked like so that I'd know where it was going to get closed at this morning, but chart's not playing along. This is an interesting stock, a utility of all things, right? I've never been a huge fan of utilities. They typically, even though the chart looks kind of dramatic, typically utility stocks just don't move a lot. They don't have a lot of action, right? So anyhow, it is what it is. It is what it is, and it's had a pretty good run here. um, Pretty decent low run, still looking good. Let me look across my thing, see if everything looks normal. Yeah, trailing. Oh, I see. I hadn't marked the latest trailing stop on here. So this trailing stop has crept up now to 31.75. And you can see, I mean, it's only a quarter, 25 cents above the prior trailing stop. But on the utility like this, these things can just sort of creep, drift higher. It's quite frankly, this particular one, that was quite the explosive rally there. I'm not sure where that came out of. You remember we looked at this a long time ago. Um, I believe we looked at this like several weeks ago when it was pulling back here, and I drew this line. And you guys remember I talked about how, kind of picks a direction and, and makes a pretty significant move in that direction once it picks a direction. So it's sold down over here. And then, once it reversed and started going up, it was a heck of a rally. And you can see a lot of zigs and a lot of zags on this chart. And like, this run right here had a big run up, a little bit of a pullback, and more of a run. And so anyway, I remember talking about how, even though this was a utility, percentage wise, it still tends to go on like these pretty big runs. What's interesting about this run that we're on is that it made the initial sort of thrust, and then it kind of had a deeper pullback than prior ones. So, but anyway, there you go. Um, I mean, it's still you go back a couple of years, and it's just kind of it's back on the comeback trail and just zigging and zagging. So, quite frankly, it looks pretty good, to be honest with you. So, not a whole lot of day to day action. I mean, the range on this thing's 50, 75 cents or whatever. So, but it is what it is. JEC was this was like one of our better trades last cycle. This goes sort of. This is a great example, I would say, of, and I haven't marked the target on here, but this is a great example of what I was talking about on the S&P chart, like how the system, the system took advantage of the prior cycle, and then when the market sold off, when we had that pullback, um, all the trades got closed, right? And so there you go. So this one, triggered in over here around 85 bucks, went through the target, bounced around that trailing stop. The trailing stop didn't get hit until 91 bucks over here, right? It didn't get hit on this pullback. Now, there was a parabolic stop that you could have bailed out like on this day down and just sort of captured that, but the actual trailing stop where the trade got closed didn't hit till 91 bucks. And so here we are again, same stock, this latest up cycle catching the same stock on the way up. Now it looks like it's struggling a little bit, up here at the highs. All right, let's zoom back on that. This is a pretty decent. There's a 2-year chart, right? So a lot of noise, prior to the beginning of this year, but real nice solid uptrend this year, and taking advantage of these last couple of cycles up. So this thing looks pretty good. Diversified technical services. Interesting. Interesting, interesting. Yep. So, oh, I know. I was going to mark the target on here, 94.50. Well, look at that. The target is right up here. What's this high right here? 94.44. So that target's just like right up above all that. And long as the trend continues, it looks fairly reasonable. Mark that on here. Sometimes I mark these things, and I like to start the target like back around where the stock triggered. So here's a case where there's the day it closed over the trigger, and the following day opened a little bit, not much, just a little bit, a, a buck, call it a buck on a $90 stock, not a huge big deal. And so, again, you compensate for that by just adding a buck to it on the target here, still following the stops. And so even, regardless, the trailing stop now is above break even, regardless of if you got in a little bit higher. So looking pretty good. This uptrend is still intact, and the trailing stops keeping us in as long as that momentum stays intact. So now we're starting to get to the stocks that have been open for a while, right? I started with the most recent stocks that have triggered. Now we're getting to the ones that have been open for a while. There's a couple of trailing stops on this particular one that I didn't mark. Sometimes they're so close together, right? Like if there's one in between these two, it's just if I don't have room on the chart to mark them, I don't necessarily mark them. So yeah, CZZ was a food and beverage, looking pretty good here. Lulu. Lulu, this is a beauty, right? I've been sort of keeping up with the stops on this. So, broke out of like this triangle here and got a pretty good rally going. Now it's sort of consolidating here. Made it pretty decent distance past the target. It's still got a pretty good looking chart, to tell you the truth. I mean, that's a nice rally. Here's the thing: is like a lot of these stocks are going to be getting closed ahead of earnings, right? So this one's kind of Martin Marietta Materials. Yeah, this one has sort of been just floundering around the trigger price and not really getting any headway. This is a really super expensive stock, and each day it's just kind of fluttering around. So let's see, the target is like man, that target's way up here at the high. It's like 279. I don't even have that marked on the chart, but I have to look up the earnings date again on this one. I have them all like noted, but this is probably, if I had to guess, this is going to be probably get closed ahead of earnings. So the next, yeah, it's a good looking chart, right? I mean, look at this trend line. I remember drawing that on there, and I mean, this stock seems like it has a habit of making its big move all at once, or this is probably, this was probably earnings, and so this may just continue to flounder until the earnings actually come out, and it may get closed, Well, I mean, it may drift down and hit the stop, the trailing stop, or it may, continue to drift higher and then just get closed ahead of earnings where it is. So, not too exciting. Now, this one's sort of the opposite of that. This one's pretty exciting. This is exactly what you want to see, basically. And we've seen a few of these on this cycle here. So this stock, a little noisy, a little noisy prior to triggering, but once it started this march higher, it's just been a real sort of orderly march higher. That's the only way I can describe it. This thing has been, initial stop was way down here. Sometimes you'll see that initial stop like way, way, what seems like way below the trigger. And then literally within, 1 or 2 days, the very next day, it can ratchet up, or just a couple days later, boom, then the trailing stop seems extremely reasonable. And so don't let that scare you if you just see the initial stop seems like it's pretty far away, because it's going to ratchet up extremely quickly. Anyway, so hey, looking good here. Looking real good. It was kind of, you look at yesterday and you think, oh man, that's it, right? I've seen that a lot in the past, I'd say the past year or two. I've seen a lot of, if I go to a candlestick chart on this, go to a candlestick chart, right? You see like a big rally higher like this, and then you get, it wasn't quite a bearish engulfing candle, but you get a big red candle after, you know, a dozen, a big run up like this, or a dozen green candles. You sort of expect, that okay, that was it. Now you're going to go into pullback mode, and lo and behold, it doesn't always. So that's pretty amazing. I mean, today you even got a little bit of a gap down, and now this thing's driving higher. So that's looking pretty good there. GNRC. Um, this one was kind of crazy because humongous gap over the trigger price. The funny thing was this one was just like all sort of setting up, just waiting, just waiting to trigger, and then of course that news came out about what is it, PG&E in California or whatever. Generac makes the generate they make the generators that everybody wants when the power goes out, and apparently out in California, hey, they're having some real issues with people getting shut out of power. But so anyway, it is what it is. It happens, right? Um, it just gapped over the trigger and it hasn't looked back, and so not much you can really do with that. This one's looking okay. This APO here, um, traded, the day it triggered, the next day traded right at the trigger price basically, and so it's kind of creeping along there, moving higher, and now the trailing stop here. Make sure that trailing stop is above the entry price, so everything's looking good. The only thing I don't have on here is the target, which is 41.35, and so I'm gonna start it over here where it triggered. 41.35, probably in about that area, and so yeah, I mean, looking pretty good here. This is sort of exactly, this is kind of an ideal scenario. Is that the price is sandwiched in between the trailing stop, which is higher than the entry price, right? Sandwiched in between that and the target. And so it's drifting higher. And so, I mean, the only thing that can sort of stop this is that I believe next week they're coming out with earnings, and so this is going to get closed ahead of earnings. And I mean, like literally, there's only like two or three of the open positions that aren't coming out with earnings anytime soon, and so keep in mind that you are going to see a lot of these stocks get closed ahead of earnings, which may be a good thing. Or in the past, we've seen plenty of the open positions just really have a big spike up, but at the same time, we just don't want to chance it, right? Just don't want to chance it. So I mean, this thing, you look back on the chart and you see what you think are some prior earnings, and it looks like some of these run ups are good earnings, and so but you don't want to get into a situation where you just get a gap down way below your entry. So only got a couple left here. Wendy's, which I'm gonna guess that was earnings there. So whenever I see like something like that on the chart, I'm always leery. You guys may remember when we started talking about it that I was a little bit leery of this because I didn't particularly, I see that on the chart, and that's kind of a yellow flag to me, but it seemed to work out pretty well. The trigger was way back here, and then it closed over the trigger fairly significantly that day, but the open the next day was right there. And so let's see, what was that open? 2043. 13 cents over the trigger, no big deal. If you compensated for that with the target, it's already hit the target, and now you got the stop like way up here, and so looking pretty good. Looking pretty good on Wendy's here. And nice thing is, I mean, the current trailing stop is basically just like just barely below where the target is, and so it's looking pretty good. It's doing what it and most of the move came this day, and I'm not even sure what the news was that day. So ever since that day, though, I mean that was sort of a crazy day because it was kind of looking a little bit dicey, and then all of a sudden on 10-11 it had this huge long range day with a gap up, and it's very odd. But I'm sure there was some news that day. I just don't know what it was offhand. And last but not least, Costco, which quite frankly, Costco kind of looks like it's had its run, and it's pulling back a little bit today, right? And so it's just going to depend on what happens tomorrow, right? It had a pretty darn good run here, right? Made it through the target. Trailing stops have been coming up, and so you can see what happened last time. This is cycle up in the market, triggers in, carries it along, and last time was beautiful because you had this long range day sort of out of the blue, which again was probably news based, and I don't remember what it was, but that's nice when you get like a surprise move like that after the you trigger in, and then rode that cycle up, and then there's where the trailing stop got hit. Once it sort of there was the parabolic stop. This is look at that. I mean, a day like that, big reversal, sort of a reversal day after run up, and then it had its sell down. I could draw a trend line across this, triggered in again, and so far so good. You can see right now we're sort of at the same type of thing as we were over here. After the run up, you get that first or second little sort of dip, and then so on Costco, depending on what happens later today. I do these shows in the morning and I see something that looks like this where it's threatening to hit the trailing stop, which by the way is $5.30 over the trigger price here. So anyhow, sometimes you see this, and then like later in the day, the thing rallies up, and then the next day, boom, the trend resumes. So anything can happen here. This it's looking sort of like it wants to come down and tag the trailing stop, but you never know what it'll look like at the end of the day, and you don't know what tomorrow will look like. So we had one earlier that we looked at that looked very similar. So all right, so that's basically it. Went through all of the open trades here, and so but between these trailing stops having ratcheted up, a few of these are going to get closed because the trailing stop's going to catch up with the price, or price is going to catch down with the trailing stop, which in theory, being above the trigger is a good thing. And then you're going to have waves of them starting to get closed just ahead of earnings. And so I try and note that on the chart, the ones that get closed ahead of earnings. And so, basically we've kind of reached the end of this particular cycle, or I shouldn't say reached the end, but we're nearing the end of this cycle up. And the funny thing is that literally, the majority of the pending trade now a bunch of pending trades did drop off the list. That's just the sort of the nature of the system, is that we could have a stock that's pending, right? And then if it continues to, it's because it's pulling back. It's a stock that's pulling back, and we're looking for it to reverse and resume the major uptrend, the primary uptrend. And if that doesn't happen, if it continues to drop, then it just drops off the list. And so that's how it works. And so right now let's see, there's just a handful. I think I said 5 pending trades there. And so, here we are, another cycle. We ended that last cycle with I want to look at one pending stock, right? And then I'm going to wrap this up. And the reason is I really like the look of this one, right? And we talked about this before. So, 76.75, right? Take a nice look at this one, because I had this marked, I think, last week when we looked at the pending trades. So there you go. Here's the trigger price, 76.75. This is really, really a nice sort of setup here. And you can see how it's like poked at it, poked at it. We just haven't had a close above 76.75, right? And I'll have to look up the earnings date on this. But yeah, this is a pretty good looking chart here, and so this would be a good one. It wouldn't take much, right? A little bit of a rally today and a close there. And one of the pitfalls of trying to, and I've had people that say, hey, why not just like set an order today to buy it at 76.75, or you could have done that on prior days. The big problem is that you'd get filled on it, and then you wouldn't really know where the system stop was. Although you could probably make up your own stop down here, but there's every possibility that this thing kind of does what it does, and then all of a sudden like rolls over and takes another down leg. And so basically the confirmation for entry would be a close over 76.75. And that's the way that Jeffrey designed this thing to work, and it does kind of make sense. And there's gonna be times where you gap way over the trigger, or times where different scenarios will play out. But so that's sort of the concept, the close over 76.75. And I've always liked this sort of pattern here, right? Like big sort of run up, nice orderly pullback, trend line break, and then a sideways consolidation. And sort of based on these spikes that you see on the chart here, it looks like this one really does have a lot of potential. Right? Now, a lot of potential here. So I want to take a look at that. There's only four other pending trades, and so like I said, we're getting S&Ps just had a big up cycle, and so now we're into earnings season. So it's time to start peeling them off, and then of course there'll be plenty more cycles regardless of what the market does. So there you go. It was fun looking at all the open trades and the charts, and thanks for tuning in. I'll see you guys back here next week, same time next week.